Good morning, traders. Today is the 17th of September, and we're going to get started with your 5-minute market forecast right now. So here we go. This is the ES chart. We're watching these low levels right now, these lows right over here. Spread it out a little bit for you. Very interesting that we've seen this correction, this deeper low here with an A, B, C, D, E type pattern downward here. This is likely to be a killer ultimate low right here. I'll try to draw a line right across here for you. And what I'm really watching for right now, ladies and gentlemen, is the washout of the Fed, a double kind of a head and shoulders formation with a shoulder here, shoulder over here, likely to prompt potentially a start of a Christmas rally in these apex periods moving higher. We need to see it get above this level right here as our ultimate high for the ES. This is, and this level here, these two highs would be outstanding for an upward trend. And I'm really leaning towards the fact that we're looking at a major bottom right now setting up in the markets. I think we're going to see the markets become very volatile over the next 4, 5, 6 days, and then begin an upward melt higher back up into this apex area, which will be October 20th, and then begin to really start to rally. Okay, the NASDAQ, same type of setup. It's really, the more I look at it, the more I see this sideways rotation right here. Looks like a fairly solid type of an A, B, C, D, E type pattern, followed by an A, B, C down, B up, and now we're looking at potentially a C wave, maybe down into this area before we potentially see some sort of an upward move. I want you to be aware that this move could be very explosive. We do have this apexing pattern set up here, and we do have a secondary apexing pattern coming down across here. So we're really looking here at around September 27th, 28th, end of September, to potentially really start to accelerate. I want you to be aware that as we move into the Christmas rally and the U.S. market still performing fairly well, could be a very good move. Okay, gold. Gold is setting up an extensive low pattern here that we need to see how this holds up. Let me go to a weekly chart. And what we need to see here is to see gold move in the direction that it has predominantly been trending, which is upward. You can see here this deep low pattern last week set up a very extensive low down here near these historical lows. I still strongly believe that gold is going to move higher. I believe this is a very big washout, panic, reactionary type of move. We're going to see some really big moves, in my opinion, over the next 15, 20 days. And I believe it could be a very powerful move to the upside. Okay, silver, weekly again. Same type of setup, ladies and gentlemen. We've got this same type of a move, although silver is performing a little bit better. You can see this upward move here last week. Very solid off of this rotation, down off of these lows. Could see a very solid move out here to the upside. I'm holding my breath and I'm holding my metals and miners positions because I believe this is really a panic move off of the Fed. And I think once the Fed makes the announcement, there's going to be kind of a relief move back to the upside, and I'm holding on to it. Okay, crude oil. Crude oil's at 85.40. I've been telling you for weeks that crude oil is going to continue to move downward. I believe we're looking at a downward cycle trend that's going to potentially move us back down into this 65, 64 level. But before that, we've got to get into the 76, 78 level. And that's the next level that's likely going to happen for crude oil. Crude oil is more than likely going to move downward on decreased demand down into the 74, 75, 76 level, stall out a little bit, and then move down here into the 62, 63 area. And I think that's where we're going to ultimately try to find support. Okay, Bitcoin. You get the chart up here real quick. Bitcoin started a very big move, just like I talked about, after reaching this ultimate low We're back down here at 19,000, roughly 600. It is holding up 19,695. It looks like right now. It is holding 575. Excuse me. Let me take a look here. 19,575. Holding up pretty well, and I am still expecting it to move up to the 25,000 level. Could dance around this support level for a while. Watch this 18,800, 18,700 level. Potentially a little lower, maybe 17,800. But I'm still looking for a 25,500 area, followed by a 31,000, 32,000 area to continue to move higher. All right, we're almost out of time. Let's take a look at the transports real quick. Transports need to hold up. And again, we're seeing that same type of a formation here. You can very clearly see the potential left shoulder here, or we could actually call it here, or actually here, and the right shoulder here with the head here. Again, it's very, very important for the transportation index to hold above this level. Understand that we need to see the transportation index and all the major markets stay above this recent low back in June if there's any chance of this upward movement. If we get below this low in June, then all bets are off. We're going to probably start to trend much lower and maybe extend downward in another leg. So if we take a look at these legs, we have one leg here, we have a second leg here. If we were to get a third leg, I've already drawn it. You can see we'd be right down in this area, 160, 180, and that would be a downward price trend of about 27.5% from these highs up here. It would be a downward move of about 16% from where we're at right now. So understand, you got great opportunity right now in the markets for a contrarian trade. If we see the economy and Christmas rally start to pull back up and re-apex over here, you have an upside potential from down near these lows of about 11%, 12% in the transportation index. I would guess that's about a 15 to 20% in the QQQ, maybe an 8 to 10, maybe 11% move in the SPY. So be aware, the contrarian side is there. This is a very low risk move right now near these lows, and I believe that we could see a very solid rebound after the Fed comments next week. There's your 5 minute, 5.5 minute roughly update. Talk to you later.